Hello again, everyone, and welcome to County TIF training. For some of you, this might be very familiar and a refresher, and for others, this might be new and completely overwhelming. It's kind of hard for us to distill TIF down into beginner, intermediate, and advanced. It's kind of all there for everyone at every level. So be prepared that if it seems a bit overwhelming, that's kind of a normal reaction. And if you're an old pro and there's not much new here, then hopefully at least you'll get some good refresher out of it. And we also had that introduction to TIF presentation on July 15th. That'll be posted here shortly if it isn't already. I think it is actually. And if you missed that, that's a good introduction to TIF. Here we're going to be focused more on what the county roles are. All right. Well, we divided this training up into 6 sections. First, we're going to look at responding to proposed TIF districts. Then we're going to look at certifying new and modified TIF districts and follow that up with a little bit on decertifying TIF districts. And after that, we'll take a quick 5-minute break. And then after the break, we'll cover the annual county responsibilities and finish up with some shorter sections on county TIF reporting and where you can find some TIF resources. Okay, let's begin by talking about a county's role when an authority is proposing a new TIF district. And just as a FYI, if you did participate in the introduction to TIF presentation a couple of weeks ago, there's a little bit of redundancy here, but I've tried to keep it to a minimum. So for context, it helps to understand the process of creating a TIF district. To create a TIF district, an authority must first draft a TIF plan, and then the authority must give a 30-day notice to the county and the school district so that the county and the school district has an opportunity to provide comments and feedback. A county cannot veto a TIF district, so this comment opportunity is just is the sole opportunity for the county to offer input or an objection or something that can have on something that can have a significant impact on your tax base. After the 30-day notice period, the authority must hold a public hearing where the public can provide comments and feedback, and presumably the county and the school district could engage at that public hearing too, but I imagine it's more common to have written comments or direct dialogue prior to the hearing when you want to give feedback. The process continues where after the hearing, the municipality can approve the TIF plan, and in the process, they make certain findings. And then the TIF plan must be filed with the State Auditor's Office and the Department of Revenue, and eventually a request for certification of the district needs to be made to the county auditor. And the certification process will be the second chunk of our training here after we talk about this comment period and feedback process. So what do you need to know about responding to notifications of a proposed TIF district? For you and your roles as county auditors or county staff, the minimum necessary requirement is actually quite simple, but I'm assuming that your county boards may look to you for information on this subject, and this subject as a whole is kind of a bigger topic. So today I'm going to equip you with kind of that bigger context so that you can fully understand what this opportunity represents and what might be possible. So first, the basics. The TIF Act requires the authority to provide the county auditor and the school board clerk with 2 things when they propose a new TIF district: the TIF plan, the proposed plan, and an estimate of fiscal and economic implications of the plan. The 30-day requirement can be waived if the county and the school board provide written feedback after receiving the information. So you might at some point get asked by an authority to fast track your feedback to kind of get rid of this 30-day delay, but I haven't heard that that's very common or anything. County auditors or staff in the county's auditor's office, your only specific role here is just to provide copies of the plan and the estimates to board members. So that could be the end of things here, is just to quickly pass those along. But like I said, there's the bigger context, and they might be asking you questions. Also, be aware that authorities are also required to provide a separate direct 30-day notice and an invitation to meet and discuss the district to the county commissioner or commissioners that represent the area in which the TIF district is located. And I don't know if they send that through staff or if they contact that commissioner directly. But this is only required for redevelopment in housing districts. It doesn't apply to economic development districts, soils, or renovation and renewal districts, which are the other three statutory types of districts. So what kind of feedback might a county want to offer? I think perhaps it falls into two camps: policy comments or considerations, and practical comments or considerations. And I can share a few examples of each. First, in terms of the policy comments and considerations, a county might just generally offer support or opposition to the proposed development for whatever the proposed development's positive or negative aspects might be. Obviously, that's the county's prerogative and it's subjective, so there really isn't much for me to add beyond that. But more specifically with regards to TIF, a county could lend its own opinions on the merits of the authority's but-for finding, as this is the only time that the test of that test of necessity gets evaluated, and the but-for finding is critical to the wise use of TIF, and we'll look at that again here a little bit in a moment. And then third, even if TIF is merited and the project is favorable, there are still size and scale issues that could be commented on out of tax-based concerns. So the county might want to see a shorter duration or some sharing of net tax capacity, and I'll expand on those in a bit. But beyond the policy considerations, there's more practical considerations. And the first is a county auditor, as a county auditor or property tax administrator, it's an opportunity to look at the plan for clarity and to ask for any clarifying questions to make it easier to certify the district later when they end up submitting their request for certification. Specifically, there's a chance to make sure that the parcel list or the legal descriptions and the maps that are in the plan, that those match, and that you understand the potential parcel changes. So, when you get to that certification process, you're not still trying to figure out what the parcels are. And then one practical opportunity stands kind of above the administrative considerations, and that's that a county can identify whether the district will impact county road improvements, and you can require those costs to be added to the TIF plan and paid from tax increment. And I'll go over that here again in a minute. So you might wonder
Jason,
why.
before you
Sure.
move on, we did just have a clarifying question regarding that 30-day notice, and I think it might have already been clarified, but just to confirm, who would the 30-day notice go to at the county? Is it the auditor?
Yeah. By statute, it goes to the county auditor. So, and I don't know if that always lands directly in the auditor's in basket or if it hits staff first, but the statute says it should go to the county auditor. Good. Okay, so you might wonder, well, why would we want to provide policy comments? And I think it's potentially important because TIF districts will lock up new tax base for the whole duration of a TIF district. And TIF decisions are made by the authority, usually the city, but they impact all of the local taxing jurisdictions, including the county. So this comment period is just the one chance you have as counties to potentially sway the authority's decision making. And a model of the TIF concept helps illustrate this. So the general premise from its redevelopment origins is that a property might be blighted, where its value is declining or stagnating, but for this a public assistance like TIF, that's expected to continue. And then when the TIF district is created, the original value at that point in time is established or frozen as the tax base for the duration of the district. And then with that financing in place, the development is enabled and the value increases as a result. Now the tax rate still gets applied to that new captured value, but those taxes are segregated as tax increment and are not part of the tax base or tax levy. When the district ends, that's when taxpayers kind of realize the public benefits as that new tax base finally becomes available to support local levies, including county levies. So the captured value that provided the increment is generally viewed neutrally as just the necessary investment that makes the benefits possible, rather than negatively as economic loss, given that the development would not have occurred but for the use of TIF. But because if instead the proposed development would occur without the use of TIF, then the justification disappears. And when the TIF district is created, the freezing of the value for the duration of the district and the capturing of that value to generate increment, that just represents an economic loss where that tax base could have been available to support, the county levy and other local levies. And so this illustration kind of highlights the worst case scenario where you might be sure that the proposed development is going to happen anyway without TIF. Maybe a more common possibility is where without TIF, there'll be some development that might occur later in the time horizon, but maybe not quite as good of a development. And in that situation, the start of the TIF district effectively does lead to a higher, value, better development, and the capture of value in increment is neutral until the point at which that other new value would have existed without TIF, starts to represent a little bit of an offsetting economic loss because it would have been available without TIF. And then in the end, there's still public benefit. It's just offset by some degree by that intervening economic loss. And of course, it's not maybe so cut and dry or easy to assess what would happen without TIF. And so that but-for test is a subjective test. And that's why a county might wish to weigh in on the city's thinking and their but-for finding, as the county tax base is also at stake. And again, it can be a positive thing where you think it's a great idea, or a negative where maybe you don't think it's a good move, but that's your opportunity to comment on what could lock up some tax base for quite a while. But beyond the but-for test and whether a county might be supportive or indifferent or opposed to the project, there's the matter of how much increment is needed to make the development happen versus how much increment might be generated by the district. So, for example, let's say a district is generating $25,000 of increment per year. Well, over a 26-year lifespan, that could generate $650,000 of increment. The plan might identify a budget of up to $650,000 of costs that could be financed with TIF. But what if the actual assistance that's necessary to make the development happen is less? What if the developer really only needs $300,000 to go forward with the project? That's kind of something that might be very hard for you to assess, but it's something that you could potentially ask questions about. Possible feedback considerations could include suggesting that the TIF plan estimates be scaled back, or suggesting a shorter maximum duration be set rather than the full statutory maximum, or suggesting that maybe some of the new values should be shared with the other taxing entities. The option to share value is not very common, but there are 3 authorities in Dakota, Hennepin, and Carver counties that are doing that for a total of 7 districts right now. And we can illustrate what the sharing option might look like. So let's say a district was expected to generate that additional $25,000 of net tax capacity, but the district likely only needs half that to make the project happen. It could be argued that, say, $10,000 of the new tax capacity should be shared with the tax base rather than being fully captured. And in this situation, the frozen base is essentially raised to include some of that new captured value. And it represents some immediate public benefits that all the taxing jurisdictions would enjoy for the duration of the district. But the risk here, however, is whether diminished increments on the remaining captured value might end up being less than projected. Perhaps the development doesn't build out to the anticipated scale, or maybe market conditions change, or maybe there's legislative changes that impact property taxes, and now all of a sudden there's not enough increment. So that's why most authorities don't choose to share value, and instead a more attractive option is to just decertify the district early once the captured increment has been sufficient to cover all the necessary costs. And this is consistent with the 5-year rule and 6-year rules direction to identify the core costs in the first 5 years and then decertify once there's increment sufficient to pay them. And by the way, in our latest legislative report on our website, we have data that shows that early decertification is very common, with 75% or more of redevelopment and housing districts decertifying early, and by 10 years on average when they do. The possibility of sharing net tax capacity affects the terminology surrounding captured value. The original value that gets frozen is called the original net tax capacity. And when the current net tax capacity is greater than the original net tax capacity, that difference is the captured net tax capacity. And by the way, the original net tax capacity isn't always truly frozen, and I'll talk about that more when we get to the annual responsibilities section. But if there is shared net tax capacity, we specify the actual amount of net tax capacity that gets excluded from the tax base is called the retained captured net tax capacity. And so most of the time, the retained captured net tax capacity and the captured net tax capacity are the same thing. But for 7 TIF districts right now, I guess in 3 authorities, there is a little bit of sharing going on. But that's why you might see those different terms in your tax system. Okay, and there's one last very practical option for a county to consider when during this comment period. Counties can require that certain road costs be included in the TIF plan and paid from tax increments if it determines that the proposed development will substantially increase the use of county roads and require them to be improved, representing additional costs, and that those improvements and costs are not scheduled within 5 years under current county plans. And would not be improvements or costs that would reasonably be expected to be necessary for the foreseeable future. I can kind of give you another illustration example here. This district is proposed next to this county road, and it'll have access off of this local road. The county may find that it'll have to make some improvements like dedicated turn lanes at this intersection. And maybe those weren't in any of the current plans, but they're necessary to accommodate all the additional traffic generated by the new TIF district. So the county could require that those improvements be paid from the tax increment. The county must exercise this option by notifying the authority or the municipality within 45 days. And when asserting this option, the notice to the authority must include the estimated costs and schedule for construction and the payment of costs. And the county and the authority must include the improvements in the TIF plan. And if the costs of these improvements and other project costs end up exceeding the total projected increment revenue, then the county and the authority need to negotiate an agreement and modify either the development plan or the proposed road improvements before the TIF plan may be approved by the authority. Which, by the way, brings up a timing problem because the authority only had to give you 30 days notice and you have 45 days to make this decision, but they may have already approved the plan if you wait the full 45 days. So it's kind of, this is something that has to be acted upon rather quickly. And I kind of wish the legislature would clean up that timing issue. But I think this is actually pretty seldom used, and so there really hasn't been anybody stepping forward to ask for that clarification yet. And one thing to circle back here too, as I mentioned, they have to also provide a copy of fiscal and economic implications of the proposed TIF district. The fiscal and economic implications include an estimate of increment generated over the life of the district, along with the shares that are attributable to county and school levies, a description of the probable impact on city-provided services, public infrastructure, and the ability to issue debt, and any additional information that is requested by the county or the school district in a written policy or otherwise regarding the size, timing, or type of development. And so let's look a little bit more at this option for a written policy. The TIF Act allows the county to adopt such a policy with standard questions that an authority needs to answer when they create a TIF district. If you don't have a policy like that, you can still request additional information, but you have to do it within 15 days after receiving the TIF plan. So that just it makes for a little bit of a timing crunch because it does not extend the 30-day notice period. So maybe having a written policy might make things go more smoothly. And I think I've heard of one county that said they had prepared a written policy, but the last couple of times I've polled about this, there hasn't been anyone confirming that. All right, and that's the end of our first section on responding to proposed TIF districts. Very good. Well, let's proceed then to talk about certifying districts, which also means getting them set up in your tax systems. So the certification process is initiated by the authority making a request for certification. And this is not necessarily done immediately after they adopt the TIF plan. There can be delays, in getting the project started, or the authority might wait until after the next June 30th for timing reasons, like I'll talk about in a little bit. The county auditor may specify the form and the content of how authorities should make that request. And I believe one county maybe has done that, where you've set up one county, I believe, set up their own form. But I think for most counties and for most TIF practitioners out there working with authorities, the requests have generally been letters accompanied by a certification request supplement, either created by the Department of Revenue or by our office. And so for decades, the Department of Revenue had a certification request supplement that was routinely used, but a number of years ago, they discontinued updating that. And I think it's no longer included in their auditor treasurer manual. But despite that, I think its use continued on autopilot for a lot of people out there. But when they discontinued that, we created what we would think is a new and improved version of that supplement that we would recommend you use if as a replacement for the revenue supplement, if you don't have your own that you want to use. So yeah, I mean, there's nothing terribly wrong about the revenue form, but ours is essentially the same thing with new and with improvements. So one way to maybe get people to move off of the revenue one and to move on to ours or to your own if you want to create one. And if you do want to create your own county form, feel free to plagiarize ours and borrow from it as much as you want. But maybe asking people to resubmit with our form or your new own form might help people get away from the old revenue form and start using the newer one, which I will go over here. So at the top of the form, we just have a little county use only section for where you can record the certification request date and the certification date, if that's helpful. The next couple of sections collect information about the entities involved and the submitter's contact information. And then there's a district information section that captures the TIF district name, the municipality's approval date, the plan type, whether it's new or a modification or a sub-district, and the type of district that is being created. And then there's a plan details section that collects the following information, all of which are very important when they're applicable, even if some of these items are seldom applicable. But they include whether there's an election to treat a parcel as occupied by a demolished building, and that one's pretty rare. So I'm not going to explain it in great detail, but there is a statutory citation there so that you can research it if it ever does apply. Next is whether any special laws apply to the district. And that one is not very rare. It applies to over 100 districts currently, so that is important to know. Next is what the authority anticipates will be the first year for receipt of increment. I'll say more about that in a little while. And then whether they have elected to delay the first receipt of increment as they're permitted to by a statutory provision, which you would need to know. Whether they've specified a shorter duration than the statutory maximum, which you'd also need to know. What they anticipate will be the year that decertification is required, whether they're sharing any net tax capacity, and if you're in one of the fiscal disparities regions, what election they've made for how to calculate increment. So again, all of those are things you need to know. And we also suggest that the certification contains some attachments. The TIF plan, of course, is essential to receive, as is a parcel list and or map. And if there's been any, there may be changes from what was identified in the plan, as there's often parcel changes going on at that time. And then The authority should also attach the resolution where the municipality approved the plan, so that you know that you're allowed to make the certification because it has been approved by resolution. And then there's there's also this provision in law that requires you to make value adjustments for properties for which building permits were issued in the 18 months preceding the TIF plan's approval. So that, and I'll talk about that adjustment a little more later, but if they would need to attach those that list of permits if it applies. So those are things you could ask for as part of the request process. So once you receive the request for certification, you will issue a formal certification. There's a sample format for this that the Department of Revenue provides in their Auditor Treasurer Manual that's on their website. And in this, you'll formally certify the district by certifying the original net tax capacity. And then you also need to certify the original local tax rate, and we'll define each of those more here in a moment. So. All right, the certification of a TIF district is the certification of the original net tax capacity, which is the net tax capacity of all taxable real property in the district. The timing of the request for certification determines which year's value you use to make that certification, and the cutoff is for requests made by June 30th versus those that come after June 30th. So requests received by June 30th, you use the previous assessment year, while those that are made after June 30th, you use the current assessment year. So for example, if a request was made June 30th of 2025, the previous assessment year is assessment 2024 for pay 2025. But if a request for certification were made like July 1st, then the current assessment year would be assessment year 2025, or which are the values for pay 2026. And the county auditor must certify the original net tax capacity within 30 days after receipt of the request, with one little exception or allowance that it be done within 30 days of receipt of the request and sufficient information to identify all the parcels. So if that initial request left you confused, as maybe you got conflicting maps or lists or something like that, you have until 30 days after receiving clarity about which parcels are in the district. But don't wait until the original local tax rate is available to certify the district. If the original local tax rate, or OLTR, isn't yet available, that part of the certification can be noted as TBD or to be determined, and then you can follow up and add that at a later date and resend the certification at a later date. It's important to note that the TIF Act defines parcel as being a tract or plat that was established prior to certification as a single unit for purposes of assessment. So you cannot include portions of a parcel in a TIF district. If part of a parcel is not in the district, according to the Department of Revenue's guidance, it should be excluded from, the whole parcel should be excluded from the district. It is possible, however, for a TIF plan to identify parts of parcels at the time the plan was approved. It's just that they need to be established as whole parcels before you can certify them. So the plan might say, this portion of this parcel, but they just need to make sure that that portion gets turned into a parcel before you can certify it. So the TIF Act in section 469.177 does identify some specific situations as to how to calculate the original net tax capacity. They include like how to handle exempt property, how to handle redevelopment district parcels where a substandard building was recently removed. That was that first item on that request supplement. Redevelopment districts that are established in a qualified disaster area or that are in presidential disaster areas have some kind of special rules. And then sometimes the ONTC of a district might be specified in special legislation. So beware that that's a possibility. And then for a hazardous substance subdistrict, which is separately certified from its overlapping parent district, the ONTC is determined by as the original net tax capacity of the parent district minus the costs necessary to remediate the parcels. So basically that means you reduce the ONTC to 0 for the sub-district, so that extra increment can be collected to pay for the remediation costs. Certifying the original local tax rate is also required by statute when the ONTC is certified, but the original local rate is the sum of all the local tax rates that apply to parcels in the district. It should be the rate for the same payable year that's applicable to the original net tax capacity. And but unlike the original net tax capacity, which could be adjusted, as I'll talk about when we get to the original, the annual responsibility section of this training, when we get there, the original local tax rate won't ever change for the duration of a TIF district. And once again, if the rate is not available within 30 days, as is going to be the case anytime the request is made after June 30th, then you should just certify the original net tax capacity within the 30 days and then certify the rate later when it becomes available. And the official certification date for a district is the date that you certified the original net tax capacity. So when you certify the rate doesn't matter. Okay, as you certify districts, you should be aware of one prohibition or limitation on parcels that cannot be included. A county auditor cannot certify inclusion of parcels or parts of parcels if a larger parcel has since been platted or subdivided. If they had qualified in the last 5 years under green acres, open space, rural preserves, or agricultural preserves, unless, exception, it meets one of two situations where either 85% or more of the square footage of the planned buildings or facilities are going to be for a qualified manufacturing facility or a qualified distribution facility. Those are in the statute. Or the district has to be a housing district. So I guess the idea here is that those programs are programs that protect land from development, and you should not be able to go from protecting land from development to flipping and subsidizing a development so abruptly. But I guess the exception is allowed for these two cases. All right, so beyond just certifying the original net tax capacity and the original local tax rate when you certify a district, you're also setting it up in your records and in your tax system. And there's a lot of important information to note, much of which we identified in that certification request supplement. But I wanted to review a few other elements to give further context. And the first is making sure that you are keeping track of important dates. So the approval date is the benchmark date for several things, or a couple things, for the election to delay if they're taking advantage of that, or it's the timing benchmark for the prior planned improvements, those building permits that they might have to attach. The certification request date, you might think is not a big deal, but it actually is an important date that triggers that June 30th cutoff date for which years you use to certify the value. But it's also the most common date that gets referenced as the effective date for new laws. And it's also the timing date for a few other provisions that we're not going to go into detail on. But the point is that that's an important date to record separate from the actual certification date. And the actual certification date similarly serves as the benchmark date for a couple of provisions, like the 4-year rule knockdown provision, the 5-year rule and 6-year rule, and several other provisions. And then the date that first receipt of increment occurs determines the required decertification date under the statutory maximum duration limits. The TIF plans include this, and they may note this on their certification request supplement. And then the required decertification date is the date that a district is required to terminate, which is either the statutory maximum duration, or if they specified a shorter one in the plan, then it would be that shorter one. They also will note this date in their TIF plans and on the certification request supplement. The label shouldn't be too misleading, though. It talks about, well, the required decertification date, but the 6-year-old might require decertification earlier than these dates. So it's just the maximum date that has to be tracked, and earlier decertification might be required. It's also important to note that the actual date of first receipt of increment often differs from what they anticipated and identified in the TIF plan. I took a look at the 2019 data and found that only 62% of plans correctly anticipated their first receipt accurately. 26% received increment later than anticipated, and 11% received increment earlier than anticipated. And now we're seeing more and more plans are including an election to delay, even if they don't think they're actually delaying the receipt of first increment, but they're specifying that anyway to try to avoid getting surprise early increments. And so I took a look at 2021 data just recently, and only 3% got increment early now, but the number getting increment later than expected was also up to almost a third. So make sure you update your records once first receipt actually occurs. Don't and to reset the required decertification date at that point too. Don't those anticipated dates are just temporary, so the actual dates need to be relied upon. All right, when you name a TIF district in your county system, it's important to be cognizant of naming it in a way that enables good communication with the authority and with our office and with revenue. I've kind of come to understand that sometimes counties just assign codes to their TIF districts, and that might be good enough for you for your internal purposes. You might just refer to them as those codes, which can cause communication headaches with outsiders. So, for example, if the city of Spruce created its 5th TIF district and called it TIF 2-1 for Acme widgets, and your county system just calls it 1405, then just naming it District 1405, or maybe naming it Spruce District 5 because it's their 5th district, those aren't going to allow good communication when you're talking to us or revenue, because we won't know what you're talking about. So it's better to incorporate elements of the city's name, and maybe like 1405 TIF 2-1, or basically borrowing their name and adding whatever code you want is probably the best way to go. The Department of Revenue uses 3 codes as part of county reporting, and we also piggyback on these same codes to track data in our system. So these are codes that you're tracking in your system for reporting, and they're very important. The first one is the TIF location code, which is assigned by the Department of Revenue. And you can look it up in the code tables on their PRISM reporting web pages on the Department of Revenue's website. You know, if you click on that link, it downloads a spreadsheet, and one of the tabs in the spreadsheet is for the TIF location code. And so, like, here's as an example, if the city of Centerville is creating a TIF district, its TIF location code is 897. And note that if a city has an HRA or an EDA, that authority might have a separate code. So for example, like 726 is the code for the city of Bloomington, but the Bloomington HRA has the code of 728. So please make sure that you're assigning the correct location code based on who the authority is. And if you've got a brand new authority using TIF for the first time and they don't have an existing code, you may have to ask the Department of Revenue to assign a code, to assign that code, because they're the ones that assign that code.
Hey, Jason, I just realized that I didn't include a link in that in our resource guide, so I will dig up that link and put it in the chat.
Okay, very good. All right, the TIF district code is a 3-district code, and this is the code that you, the county auditor, assigns to a district. And when you combine the location code and this district code together, it should uniquely identify a district. So do not assign this hastily, and keep track of what you've used in the past. Because what we've seen sometimes is, a county might reuse a code that an old decertified district had, And then that creates huge problems for revenue and for us, because now we've got the same codes meaning two different districts. And then we have to coordinate with you to rename it, or it just becomes a big pain. So please keep track of the district codes you're assigning and don't reuse them. You'll make us very happy. And then the HSS code, which is generally just 01 if it's the hazardous substance subdistrict, or 00 if it's for all other districts. Sometimes we see people flipping around and changing it to 10 or changing it to 99 or changing it to something else, and then that just, as you can imagine, changing the codes messes things up. So please keep that consistent, as we do spend a lot of time trying to clean up data for codes that get reused. All right. So a TIF authority has an election to delay first receipt of increment, as I had mentioned, and they can delay the first receipt of increment by up to 4 years by specifying the first receipt year in the TIF plan. And this is not allowed for economic development districts, however, so it's only usable by the other district types. The election might be used to avoid partial years of increment for development that occurs over a couple years, or it might be used, like I said earlier, to avoid a surprise that isn't caused by development, but is just caused by like a market change or something. This is being used, like I said, by more and more districts, even if they don't actually think it's a real delay. They're just specifying that first year to avoid those surprises. And when I looked at the 2021 TIF plans, 56 of the 72 eligible districts, so in other words, the districts that weren't economic development districts, 56 of those 72 districts were electing this option. So it's very much kind of the norm now for people to be doing this. And an example kind of helps illustrate things here. So for this example, a plan was approved June 2nd of this year, and the request for certification was made before the June 30th cutoff. Construction is slated to begin in the fall and finish next summer. So we can actually see two possibilities for less than full increments. First, pay 2025 based on the January 2nd, 2024 assessment date would be the base year. And if the January 2nd, 2025 value had increased, maybe just due to market conditions, because it hasn't increased due to construction activity, that pay 2026 could yield increment just based on that change in value. And then when the construction does start, that January 2nd, 2026 value is only going to reflect part of the construction. And so pay 2027 would reflect just partial increment, not kind of on the final project. And it wouldn't be until pay 2028 where you would see the first full year of increment. And so an authority could elect to set 2028 as the year of first receipt of increment. That would skip collections in 2026 and 2027, and it would end up making 2053 the maximum duration limit instead of 2051. Now, an authority could just wait until after June 30th to request for certification to avoid that surprise 2026 increment. But in any chance, they do have the ability to set the first year of increment, and you have to make sure that you don't start generating increment for them until that first year. Okay, a couple of notes are important regarding elections to delay. First, don't rely on what they say on the certification supplement or any form that you might ask, because they're often wrong. Make sure you check the plan. At one time, I compared the TIF plans to the forms that we ask them to send us when they create a TIF district, and the forms were incorrect about half the time. I think that's gotten a lot better recently, but even when I was looking at the 2021 TIF plans, there were still a couple that had an election to delay in their TIF plan, but they didn't note it on our form. And I think sometimes it's pretty clear that there is election to delay language, but they don't mark it on the form because they think, well, it's not actually a delay. So anyways, make sure you anything you get on the form, you're actually double checking in the plan. TIF plans can be confusing as to whether they're making a clear election. And so here's kind of some examples of what a good clear or what you might see. So example A is pretty good. It says the city elects pursuant, and then it cites the statute to receive first distributions of increment in 2028. So that's a clear election to delay. Alternatively, it might say the city expects to receive first increment in 2027 and elects to have the first collection year be 2027. So they didn't cite the statute there, but that's still pretty clearly an election for first receipt, even if it's not actually expected to be a delay. Or they might say something in the plan that just says, the city will receive increment beginning in 2028. Well, that's not really an election to delay. That might be a guess, or a prediction. So that I wouldn't say is a clear election to delay. And so if you run into something like that, you maybe need to double check with the authority. So.
Hey, Jason, I have a clarifying question about that election to delay.
Sure.
Someone is asking, can they request to delay after the fact, after finding out that there's no increment, if there was no development and no increase in valuation?
Yeah, I think what we kind of landed on was what we think makes sense is until first receipt, like if they didn't include an election to delay in their TIF plan, obviously once they get first receipt, it's too late to elect a delay at that point because they've already received first receipt. But if increment hasn't been generated yet, it seems plausible that they could amend their plan to add an election to delay. But I don't think, once they've received first receipt, at that point, I think it would be too late to be adding the election at that point. So. All right. Well, the next important factor to identify when you're setting up a TIF district in your system is the fiscal disparities election, at least for those of you in the fiscal disparities areas, which are outlined here on this little graphic in gold. So in short, it could be pretty complicated, but in short, fiscal disparities is a program that requires a portion of new commercial industrial value to be shared, but that conflicts with the notion of TIF capturing that same value. So how do you share value and capture it at the same time? You can't. And so to resolve that conflict, there are two choices. With option A, which is the default, the TIF district will capture the value, and then that sharing of value with the fiscal disparities pool has to come from the existing tax base, which actually causes taxpayers to have to shoulder extra tax burden. With option B, the fiscal disparities contribution is made from the TIF district first, which holds taxpayers harmless, but that reduces the amount of increment that's going to be captured. And so it can kind of hurt the viability of the project. So those are the two options. And I'll come back to that later with examples. And then lastly, with regards to certification, you need to be aware of and adjust for prior planned improvements. So the county auditor must increase the original net tax capacity to include the net tax capacity of any improvements that were approved by building permits issued in the 18 months prior to the TIF district's approval. And the idea here is to ensure that the TIF district isn't capturing value growth that was already in the pipeline or that was already planned without needing the assistance of TIF. And an authority has to provide you with a list of those building permits it issued when it makes a request for certification. Alrighty, well, before we take a break, let's knock out this decertification section here. So by statutory definition, to decertify or decertification means the termination of a district, which occurs when the county auditor removes all the remaining parcels from a district. And doing that ends the collection of increment or turns off the spigot, so to speak. However, even after a TIF district decertifies, its reporting must continue until all the remaining tax increment revenues that it did receive are spent or are returned to the county auditor. And a large number of districts that report each year are actually decertified districts. I think there's at least a couple hundred districts that report every year are decertified. So things aren't really done and over with TIF until the books are closed. Statute provides that a county auditor must decertify a TIF district at the earliest of these times. So the maximum statutory duration limit is reached. They've reached the earlier decertification limit if they specified one in the TIF plan, or upon completing the actions that are required under the 6-year rule for a required early decertification, or you receive a request by the authority to decertify the district. So for the first two of these, the county auditor must be monitoring those dates, and you take action, without any notification. You're watching those dates, and you're responsible for taking that action. For the second two of these, you would be responding after you're being notified. And with respect to the 6-year rule, that wasn't clear before, but we did a 2023 law change to try to clarify the process around the 6-year rule decertification. It had always been the practice that the authority would be notifying the county in those cases, but there's a little bit of language in the law that seemed to suggest that the counties should know, but that was kind of based on kind of false assumptions as to how things would really work. So we cleaned that up in the 2023 law changes, and now the statute explicitly addresses that process and requires the authority to notify you. And I'll talk about that more later. The maximum statutory duration limits, those extend from the year of first receipt of increment, and the durations vary by district type. So an economic development district can collect increment for 8 years after the first receipt. And so that's actually 9 years of increment. And so redevelopment district can collect 25 more years after the first year, so they can collect for 26 years. And then the statute instructs that no tax increment shall in any event be paid to the authority after these limits are reached. And as we've already discussed, be sure to distinguish between the actual required decertification date from the anticipated required decertification date. So if they had indicated that they expected to get first receipt in 2001 and would expected to decertify in 2026, but you actually distributed first increment in 2000, then you'd need to make sure you decertify that district in 2025 rather than what they had anticipated initially. The full increments from taxes payable in a year that they terminate are allowed to be paid to them or shall be paid to them. So that's why most duration required decertification dates are expressed as December 31st, because if you specified a mid-year date, they get the whole year's increment anyway. So most decertification dates are expressed as December 31st, but either way, they'll get their whole increment. And note that would include the following January settlement. And the other footnote here is that in the past, some districts had different duration limits based on approval dates instead of first receipt dates. So for those of you that have been around for a while, you might be thinking, wait a minute, I didn't think it was always based on that. I think that is no longer very applicable. I think most of those districts have all decertified by now. So you probably won't be running into exceptions anymore. For decertifications under the 6-year rule, let me give a little bit of brief background. Early in the history of TIF, authorities were criticized for prolonging districts by continually finding new costs to spend increment on, way beyond what was necessary to make the development possible. And so the 5-year rule and 6-year rule were put into place back in 1990 to try to focus the use of increment and then get the new value into the tax base as early as possible. And so the 5-year rule provision was created to add a timing element to what gets considered to be in district versus out district. And whenever they're spending money outside the district, but in a larger project area, it's called pooling. You hear that terminology? Generally, increment is only considered to be spent on an activity inside the district if it's spent in the first 5 years, or if it's used to pay off a bond or an obligation that had finance costs that were incurred in the first 5 years. So therefore, any new uses that they're coming up with after the first 5 years, those are considered out district pooling expenditures that they would have to fit within some limits. And then that forces them to have to use the increment for the initial purposes and not be able to come up with all kinds of new things later on. The 6-year rule then provides the early decertification requirement. The 6-year rule was substantially changed by the 2023 legislature based on suggestions from our office that we had kind of worked with affected parties on. And there's now a formula to decertify when sufficient increment is received to pay in-district costs. But one part of the clarification was the treatment of pay-as-you-go obligations. So pay-as-you-go obligations generally only apply to specific parcels and not the whole district. And they generally need to run for their full term. And so there's this provision now that if the formula is triggering time for decertification, that time for decertification can be deferred until the PAYGO note terminates. And I'm sparing you a ton of detail here because these rules mostly are things that the authorities need to be concerned about. From your perspective, you just need to know whether the decertification has been triggered or not. If you do want to learn more about these rules, there's videos on our website and content on our website that you can learn more about them. But anyways, the new procedures are if there's no PAYGO deferral of the decertification requirement, even though decertification would be considered effective December 31st, county auditors don't have to be notified. The way it's worded is that you need to be notified as soon as practicable and no later than the final settlement distribution date of January 25th. And so I know that's late and may cause difficulties for you in getting increments stopped for that following year. But the advocates for the TIF authorities had pushed for a much later deadline because, they were talking about how the year-end activities, caused them to want to tell you about it later. And so this January 25th cutoff was kind of the compromise that was put into the statute. But if the decertification was deferred due to a PAYGO note, then you have to be, notified by December 31st. And even that is a late date. So one thing you might want to consider doing each year is just giving your authorities a heads up to notify you earlier if it's at all possible. They'll often know much earlier in the year whether they're decertifying or not. So prompting them for earlier notice might be helpful to you. Okay, if the late timing of the being notified about a decertification under the 6-year rule makes it so you're unable to prevent increment from being calculated for that following payable year, then you're given the authority to simply redistribute that increment that gets calculated and just redistribute it in the same manner as you distribute excess increments. You don't first have to send them the money and then ask them to return it so that you can redistribute it. You can just jump to redistributing it. But if you do distribute them, they're required under the 6-year rule to return it to you so that you can redistribute it. And I'll talk about that more in the next section. When a district decertifies, we require the completion of a confirmation of a decertified TIF district form. And the purpose of this form is to ensure that the authority, county, and OSA are all on the same page. So the authority fills out Part A of the form with the decertification date and the final distribution and any amounts that the authority is ready to return at that point. And then the county completes Part B, which just confirms that information, or you can note any discrepancies. And then it's up to the authority to make sure that copies are sent to everybody, but we really do appreciate it when you copy us on that when you return it to the authority, so we're notified quickly. And for early decertifications, we also ask the authorities to provide us a copy of the resolution that they use to decertify the district. And this is currently a kind of a paper-based process or a scan and email process, but we do have plans to streamline that, and we hope it's coming soon. But there's always IT priorities, as I'm sure everybody understands. So hopefully, an improved process is coming soon. One provision to note here relates to delinquent property taxes that you might receive after decertification. If that happens, the county auditor can only distribute those collections as tax increments if the parcel was in the TIF district when it was decertified and the taxes were delinquent, not just past due, and their non-payment had caused an obligation to go unpaid or to be paid from another source, and the authority provided you with information needed to administer such payments. But otherwise, generally speaking, delinquent receipts after decertification should just be distributed as ordinary property taxes and not distributed as tax increment. So they basically have to go out of their way to get it, to receive it as tax increment. Otherwise, you just treat it as if it's not. All right, well, let's now discuss the things that counties must either perform or monitor on an annual basis. So first, beyond certifying and establishing new districts, you should be aware that TIF plans can be modified or amended by an authority at any time during a TIF district's lifespan. So one activity you might encounter in any given year is responding to a modification. And some modifications may require the county to perform administrative actions while others might not. Like, for example, if parcels are being added or removed, or the duration changes, or an election to delay increment is added, or if there's a change to the fiscal disparities option, those are all things that would affect your county administration. Alternatively, if they're just adjusting budget line items or some financing details, then those might be things that wouldn't require any changes on the county side of things. Some modifications are going to require the full notice, hearing, and approval process that's required of new districts, while some more administrative changes do not. The modifications that require the full notice and hearing process are those that include enlargement of the geographic area of the district, which is not allowed after the first 5 years, reductions in geographic area that cause an increase in captured value, and that would only happen if the current value of a parcel that's being removed is less than the original value, an increase in bonded indebtedness, a determination to capitalize interest, an increase in the share of captured net tax capacity being retained, an increase in the estimated cost to be paid with tax increment, and a designation of additional property to be acquired. So these are all generally expansions of TIF in some fashion, but more administrative modifications that don't require this process, like maybe removing a parcel, is still something that might require county action. So it's not just, it doesn't matter if it requires the full approval process or not. Some changes are going to require county action and others are not. The original net tax capacity is generally thought to be frozen for the duration of a district, and that's kind of how I showed it in those graphics. And that's loosely true in concept, but technically there are actually numerous changes where a county auditor might have to make an adjustment from year to year of the original net tax capacity of a TIF district. So a county auditor should make original net tax capacity adjustments when there are changes in the classification of parcels in the district, when the legislature changes class rates that might affect any TIF parcels, when TIF parcels change from being exempt to taxable or taxable to exempt, when districts are enlarged or reduced in size, when a TIF parcel might cease to qualify for green acres, open space, ag preserves, or rural preserves, when TIF parcels have value increases under plat law, when parcels cease or begin to qualify for any exclusion, when a disaster declaration impacts TIF parcels, and when TIF parcels are affected by a court-ordered abatement, stipulation agreement, voluntary abatement, or Commissioner of Revenue order. So the TIF Act provides for how the original net tax capacity should be adjusted in each of these cases, and you can find the references to those and more detail in the TIF County Guide that's on our website, and I'll mention again in our resources section. But clearly there's a pretty good list here of things that you may need to be on the lookout for. And again, a lot of these aren't going to happen every year or very often, but when they do happen, adjustments are needed. And so on an annual basis, these are things to look out for. Note that many of the original net tax capacity adjustments must explicitly be certified to the authority. And even more generally, there's a provision in the TIF Act requiring that county auditors annually certify to each authority the captured net tax capacity of each TIF district and its proportion to the TIF district's total net tax capacity. In that certification, you'd also identify any shared net tax capacity that might exist. And I don't have an example that I found that I can share with you to, and I think it varies from county to county in format, but just be aware that, you're probably doing this in some capacity already, but you do need to make an annual certification of values to each of your authorities. And now moving from values to tax increments, the county auditor must annually calculate the tax increment. This is largely just the tax that's on the retained captured value for those of you that are not in a fiscal disparities area. For those of you that are in a fiscal disparities area, the previously noted two options are important, and we'll take a closer look here. Couple of minor notes. Option B had been required for economic development districts with the request for certification date before June 30th of 2014. I think many of those have probably decertified by now or will be soon. So this is largely something that's fading into the past. And then note also that the chosen option of computation is normally fixed for the life of a district, but it can be changed once from option A to option B. And it's very rare that it would ever switch from option B to option A. You can only do that if under some special deficit provisions that are increasingly rare. So the option that they choose, A or B, impacts tax increment calculations primarily by affecting the current net tax capacity and the local tax rate. And so let's take a look at an example to make sense of that. So this is a simplified example for general education. And so please rely, if the Department of Revenue has a more specific example or more detailed calculation instructions, please rely on what they're telling you. This is just what I came up with, what I understand to be true, but revenue would be more the authority on these calculations. So let's say the net tax capacity for a single TIF parcel is currently $60,000, and the original net tax capacity was identified as $10,000. So you've got a growth of $50,000. So for this example, it's all commercial industrial value, and under fiscal disparities, 40% of the growth, the CI growth, or $20,000, has to be contributed to the fiscal disparity pool. Well, under option A, where the TIF district is making full capture and the fiscal disparity contribution is being made from outside the district, we would determine that the full $60,000 of net tax capacity is the current net tax capacity. So that exceeds the original net tax capacity and gives us $50,000 of captured net tax capacity. And for these, we'll assume there's no shared net tax capacity. So that's also the retained captured net tax capacity. Under this scenario, the rate calculates, the tax rate gets calculated as 116.688%. And I'm omitting the details here of how that would be computed. But the point here is to note that the tax rate is going to be higher under an option A than under option B, because this rate uses a smaller tax base value because the rest of the tax base had to make that fiscal disparity contribution, and because the captured value is greater in under option A. But applying this rate to the captured value gives us $58,344 of tax increment. Let's compare that to option B, where the district makes the $20,000 fiscal disparity contribution. So we have to actually then take that $20,000 out of the current value and identify the current value now as being 40,000. So the captured net tax capacity is now smaller at $30,000 of net tax capacity, captured value. And again, the rate under this example would be a little bit lower because the remaining tax base that's used in the rate calculation didn't have to make the fiscal disparity contribution value because it came from the TIF district, and we have less captured value in this scenario, so the rate is a little lower. So under this example, we determine $34,864 of tax increment. And so this example shows how option A provides the full capture of tax increments, kind of prioritizes the tax increments, and then it causes that contribution to be made elsewhere, which raises the tax rate, while option B avoids those taxpayer impacts, but causes there to be less tax increment, which then makes the viability of the project a little more challenging too. So when option A applies, the increased property tax imposed on other properties as a result of the contribution to fiscal disparities coming from outside the district is something that has to be included in the annual disclosure statement that authorities publish annually. And I think TIF authorities are probably going to turn to county folks for assistance in identifying the data that they need to make those calculations. And the instructions for the option A tax increase calculations are provided by the Department of Revenue on its website. So you can see what data is needed, or you can refer authorities to that when they're asking about it. And I recently noticed, though, that there's one county that does all these calculations for their authorities and posts them on their website. So kudos to them. Now, beyond fiscal disparities, there's another calculation provision that everyone needs to understand, and that a tax increment might be limited to less than the full tax on the retained captured net tax capacity due to a statutory provision. Tax increment is limited by statute to the tax generated by the lesser of the local net tax capacity tax rates or the original local tax rate. And that's why you had to certify the original local tax rate when the district was certified. So if the original local tax rate is the lesser rate, tax increments are limited to just a portion of the extra tax generated by applying the local tax rate to the captured value. And the rest of that extra tax caused by the higher rate gets defined under statute as excess taxes. So please note that excess taxes, which are not tax increments, should not be confused with excess tax increments. Shame that they had to kind of label these things nearly the same. But excess tax increments are tax increments that are just in excess of what was authorized by the TIF plan, but these excess taxes are not tax increments. And as I just said, excess taxes are the additional taxes generated on the retained captured net tax capacity when the current rate is higher than the original rate. The legislature enacted this provision because they didn't want TIF districts to benefit from increasing tax rates. They only wanted increment to be generated by increasing values. So the county auditor, therefore, must determine and distribute excess taxes and appropriately limit the tax increment computation for this provision. And here's kind of a graphic that helps illustrate that. So on the x-axis here, we have the value, and on the y-axis, we have the tax rate. The blue area is the taxes on the original net tax capacity. So no matter what the rate is, those taxes are regular property taxes and just get distributed to all the taxing jurisdictions accordingly. But as value increases beyond that frozen base value, you get captured net tax capacity. And so the taxes on captured net tax capacity up to the original local rate, those are distributed as tax increments to the TIF authority. But if the rate goes above that original rate, then those additional taxes on that captured net tax capacity, those aren't tax increments anymore. their excess taxes. And those are basically bonus revenues that are distributed to the county, city, and school district in a special manner, which I will talk about. So excess taxes are distributed to the municipality, the county, and the school district based on whose current local rate produced the excess taxes. Now, other taxing jurisdictions like special districts, they do not get a share of excess taxes. And each of the three entities' shares of excess taxes are determined by dividing their rate increase by the sum of the rate increases for all three entities. And if it happens that the excess taxes are generated entirely by special taxing district rates going up, then those excess taxes are distributed to the municipality, county, and school district just in proportion to their respective tax rates. And an example is going to help make sense of all of this, I think. And by the way, this example too is based on our interpretation of what DOR has instructed. So please rely on revenues guidance if there's any differences, what you see there versus what you see here. So the first part is determining how much total excess taxes there are. So here we show current and original tax rates for each jurisdiction. And we show any local tax rate increases. And for simplicity, I'm ignoring all the decimal places, but I do realize that the decimal places are super important. So let's say you got a total current rate of 125% versus an original local tax rate of 100%. So that's an increase of 25 percentage points. The county rate had increased by 7 percentage points. The city rate increased by 15. And the school district rate had a 0 increase because it actually went down. And then other special taxing districts increased by 6 percentage points. So if the retained captured net tax capacity is $10,000, then because the original local tax rate is the lesser rate compared to the current rate, then tax increment is limited to the original local tax rate multiplied by that value. So tax increment is limited to $10,000. But the full rate is applied to the value. So there's actually $12,500 of taxes being raised on the retained captured value. So you subtract out the $10,000 of increment, that means there's $2,500 of excess taxes. So now let's look at how this $2,500 of excess taxes get distributed. You determine the county, city, and school district distribution shares by dividing each entity's increase by the sum of those three increases. So here the sum of the 7%, 15%, and 0% increases is 22. So not the full 25 percentage point increase because we're ignoring special districts when we make this calculation. And then these fractions or shares are then applied to the $2,500 of excess taxes to determine the distributions. So the county gets $795, the city $1,705, and school district nothing. Note again that this method is only for the distribution of excess taxes. So when you get other increment that you have to redistribute, this doesn't apply to any other redistributions of like excess tax increments or returned monies. This is only the procedure for the excess tax calculation. So now let's switch to the similar term, excess tax increments. Excess tax increments are those increments that exceed the amount that's needed to pay authorized costs in the TIF plan for the year. And authorities have to determine this amount annually, and they do so using our TIF annual reporting forms. Authorities are required to either use excess tax increments to prepay debt, or they have to return it to the county auditor, and they have to do that by September 30th of the following year. So when these returned excess tax increments are received by the county auditor must distribute them to the city, county, and school district in proportion to their tax rates. So no fancy complicated calculation here like for excess taxes. It's just the share of the three, each district's share of the sum of the three in total. You're required to notify the Commissioner of Education anytime you make a distribution to a school district. It was previously required that this be done within 30 days of making a distribution, but that got changed a few years ago. So now you have to notify them by February 1st of each year for any distributions that you made in the preceding year. And actually in this year's session, they added that language to the school aid statute, but that language already existed in the TIF statute. So nothing really changed there except they added a reference in the school statutes. Not all increment returned to you is going to be excess tax increment though. So if an authority has just unneeded surplus amounts that they want to return, even though they fit within what their plan authorized, they might be returning that to you for redistribution in the same manner. And so for you, there may be no meaningful distinction, whether it's formal excess or whether it's just surplus, it doesn't matter. And you may also receive payments or returned increments that are made to remedy increments that were received in violation or spent in violation. And those also get distributed in the same way, same as excess and same as surplus, but with one exception. If we issue a formal notice of noncompliance, an authority has 60 days to respond to that notice. And if the authority doesn't make payment in that period, or before a county attorney commences action to compel payment, then it won't get its share of that redistribution. You just redistribute it to the county and the school district and not the authority. Because the statute requires us to forward any unresolved notices of noncompliance to the county attorney to pursue. And so that's why they may be getting involved to compel payment. This isn't very common, and if this where they refuse to remedy things within the 60 days. So we'd likely be in communication with you if that were the case to make sure that you are applying this exception correctly. Okay, another calculation and distribution item to be aware of is the OSA's enforcement deduction. The county treasurer must deduct 0.36% from all distributions of tax increments, which then must be sent into the state to fund our office's TIF oversight function. Note, do not deduct the 0.36% from redistributions of tax increment because they're no longer tax increment at that point. Once they return tax increment to you and you're redistributing it, that's just regular money now. It's not tax increment, so you don't have to take deductions from those amounts. You'll report the amount of these enforcement deductions on the county TIF information form, and you'll remit them to Minnesota Management and Budget, or MMB. And these are to be included with the monthly remittances for vital statistics and real estate surcharges and fees. So please make sure to send them with MMB's form. We have a very difficult time getting them properly identified and sent to our office if they are misdirected elsewhere or if they're not accompanied by this form. And so we've spent a lot of time trying to get money straightened out with MMB because this form isn't always used. So please make sure you're sending it in with that form. Okay, so moving past annual tax increment collections and distributions, there's still several other annual responsibilities for counties. The first one we've already covered, which is identifying and enforcing duration limits to make sure that no increments paid after a duration limit is reached. We've already talked about how it's important to distinguish between the actual first receipt versus what was anticipated. So maybe it's better to think of this as two annual duties. Obviously, the main task is to identify a maximum statutory duration limit or an alternate shorter duration set in the TIF plan, or upon receiving a notification, whether it's the authority's choice to decertify the district or whether they're acting under the 6-year rule. And then the second task then is just to make sure that you're updating duration limits for when actual first receipt of increment occurs. So those kind of think of those as two separate things. And the TIF County Guide may touch on some other details. So consult that, and of course the statute when questions arise or if you have unique situations. Another time-based provision in the TIF Act that the county auditor is responsible for is the 4-year knockdown rule. And this rule provides that if no activity commences on a parcel in a TIF district in accordance with the TIF plan after 4 years from the date of certification, then that parcel must be knocked down such that it'll no longer capture value or produce tax increment. And activity in this context means things like demolition, rehab, renovation, and site preparation. And it can include adjacent street improvements like rebuilding streets or relocating streets, but it doesn't include just routine overlays or maintenance on streets. And installing utility services like sewer and water do not count as activity. To apply this, the statute requires authorities to provide evidence or documentation to the county auditor by February 1st of the 5th year following certification. So now, of course, you can probably anticipate that not every authority is going to remember to do that. A lot of the times, the people setting up the TIF district aren't the people who have to keep track of it going forward. And so what are the odds that they're going to remember, oh, it's year 5 now, I have to send info to the county. So counties are well advised maybe to keep track of this and then to seek that information when it's timely. So annually reviewing whether you have any districts that are hitting this time frame is another good idea. And so then you should compare the documentation that they provide to the TIF plan, to make sure that the activity is consistent with the plan. And if no authorized activity is taking place, statute indicates that the original net tax capacity of the parcel has to be excluded from the district's original net tax capacity, which is a little bit cryptic. And to be honest, I'm not exactly sure how you all operationalize that. You all sometimes have different systems, but you might be tempted to think of it as removing these parcels from the TIF district. They're not technically being removed from the TIF district, but maybe that's how you actually effectuate it so that it's not collecting the increment. But anyways, since I don't know how every one of your systems works, I can't really give you more specific details and examples. But basically, you need to make sure that no increment comes from those parcels if there's been no activity. But if development activity subsequently commences on the parcels and they notify you of that, then those parcels can be restored to the TIF district and can again produce tax increment. But the difference is that you would reset the original value for those parcels to be the most recent value when the activity started, not the original value for when the TIF district was created. So you basically update the original net tax capacity to a most recent value when that occurs. Another good annual check to review is to look for any special laws that might affect districts in your county. Another batch was passed this year. Special legislation can require action by the county auditor, like adjusting a duration limit or an original value. And for 2023, authorities have reported to us that 114 of the TIF districts out there are subject to a special law. So this is not something that's rare or unusual. It's probably like 1 out of every 16 districts has a special law. Some special laws may require approval by local units of government. So there's also a chance there for the county to maybe approve or to refuse to approve certain special laws. And the most common special law provisions that we see are like 5-year rule extensions, duration extensions, changes to the rules for being able to create a TIF district, and changes to various limits on how the increment can be spent. Another potential responsibility is to respond to a notice to withhold tax increment sent from our office. Authorities have to submit annual reporting to us, and it's due every year by August 1st, so it's all due tomorrow. And if we don't receive a report by October 1st, then we notify the county auditor to withhold all distributions of tax increment from that district. And so you just withhold 100% of the increment that you would distribute to them until you hear from us. And so when we do eventually get the report, we have 5 working days to notify you that you can release that increment. And then once you get our notice, you have 15 working days to do that. And I guess the good news is that the county can keep any interest it earns on while that increment is being withheld. So hopefully this next one isn't an annual responsibility because it deals with making errors. But if a county auditor makes an error or a mistake, there is a statute that addresses that. And it provides these broad options for resolving the issue. You can certify the original net tax capacity at an appropriate value for a later year and extend the duration. You can recertify affected parcels and extend the duration. You can recertify or correct original local tax rates if they were wrong. You can adjust tax rates for 1 or more years to recoup amounts advanced or to replace reduced increments. Or there's kind of this catch-all that says you can take other appropriate action so that the increment compensates for or offsets the error and or correctly reflects the application of the law. So that last one's pretty broad catch-all. And the errors or mistakes that we're talking about here are errors made by the county and include substantive matters like decertifying a district incorrectly or failing to certify a district or incorrectly certifying it or otherwise failing to correctly compute the amount of increment. So this isn't for just a minor like recording a date wrong or something like that. If that has no further consequence, it's for basically fixing incorrect increment amounts. There is some process involved. The county auditor has to notify the authority or municipality in writing of its proposed solution 30 days prior to taking a corrective action. Now, naturally, there's probably some back and forth communication that you're having between the authority and the county, which is great. But one note I would have is to make sure you properly formalize the conclusion that you come to with a formal notification, because statute provides that if the authority or municipality objects within that 30-day period, then the matter gets submitted to the Department of Revenue for resolution, and they're required to comment or consult with us to see what we think. And we've seen times where there's communication between the city and the county, and they think they agree on something, but later the city objects, and then it becomes unclear, was there a formal notice given because you had been in agreement, so you just proceeded? But it's best to make sure you're documenting that with a formal letter to basically start that time frame. So even if you're not in disagreement about how to solve the problem, make sure to document it. And then anytime you do a correction, whether you're all in agreement or not, make sure you notify the Department of Revenue and our office of any corrections that get applied. The last annual item is that counties may require reimbursement from authorities for its actual expenses for administration of their TIF districts. And last time I asked people about this, I believe about 39% of counties do ask for this administrative cost to be paid. And if your county chooses to do this, you just need to notify them with documentation of the cost annually, and you can require payment by February 15th of the following year. And if for some reason those costs become disputed, there is an arbitration process by which those disagreements can be resolved. And that brings us to the end of the annual responsibilities section. Do we have any questions?
Yeah, we did have a question kind of early on in the section, and then it may have gotten kind of resolved when you were talking about the 4-year knockdown rule and removing parcels. But the question is, the city provided a resolution to remove 3 of 4 parcels in a TIF district effective December 31st, 2025. Do I need to do anything at this time other than remove the TIF code for pay 2026 in our tax system?
Let's see. So if they've removed a parcel from the district, yeah, I don't know exactly how that works in each of your systems, but basically, if you would basically recode that parcel so that it's no longer part of that TIF district. I imagine that that's what's needed, but I guess you'd have to kind of maybe consult one of your tech system experts because we don't actually ever really see or interact with those. So I can't say with any level of confidence exactly what you need to do, or if there's something else you need to do. But yeah, it sounds about right. But you may need to follow up with someone who's more of an expert in the system you have. So, all right. Well, yeah. Thanks for sharing that. So let's continue here with our next section, which is county TIF reporting. Broadly, there's just a few TIF reports for counties. So for the OSA, there's just the confirmation of decertified TIF district form, which we already talked about. And then there's the annual county TIF information form, which I can talk about here in a second. For the Department of Revenue, they used to have what they called a TIF supplement. I don't know what they're still referring to it as now that they've got the PRISM system reporting. But there's basically data, TIF data that you're reporting to revenue as part of their PRISM reporting. And I'll leave revenue to speak to that. And then for the MMB, when you're sending in those remittance reports, we already talked about that and kind of covered that. So let's just take a look here at the county TIF information form. The annual county TIF information form is due at the end of March of each year, and it just reports data related to the prior year's activities. So it communicates several key activities that aid our TIF oversight, and I think our oversight helps protect county interests as well as taxpayers' interests by making sure authorities are doing things properly. So it allows us to verify that the TIF authority is reporting accurately, and it communicates to us how much TIF enforcement deduction transfers we should be receiving from MMB. The form itself is an Excel file that has 4 tabs, and there are instructions for it on our website. The first tab is the Home tab. There's no entries on this tab. It just contains general information like where to find, when it's due, and what the purpose is, and where to find the instructions. But one important thing on here is the table of read messages that identifies if there's any unresolved read messages elsewhere on the other tabs. And a red message appears when an entry or an answer has not yet been entered, or when something is incorrect. And so, for example, here, the first question on the TIF activity tab requires a yes or no answer that was overlooked in this case. So the table here shows there's still a red message on that tab. Sometimes on the other tabs, you may have to scroll to the right to see red messages just because of the screen width or whatever. So it's handy to check this table before you try to submit your form, just to make sure you've found and resolved any errors. The second tab of the form is just the TIF activity tab. This is a few questions about whether certain activities occurred in the prior year. So for each of those, you just answer yes or no, and then provide very basic information about them. So the activities include, were there any new districts certified? Did any districts get their first receipt of increment? Was any increment returned to the county for redistribution? Excuse me, were there any decertifications? Did any 4-year rule knockdowns get enforced? And were there any corrections of errors? The last question on there is just kind of a survey question about, do you ask for county admin costs to be paid? And then the next tab is for reporting the distributions and settlements of tax increments to each TIF district. So distribution amounts are reported for the payable year. So you report the calendar year distributions excluding that year's January settlement, and then you include in a separate column the corresponding January settlement in a separate column if there is any. And then because this might be a lot of data to enter for some counties, especially those that have like hundreds of districts, we do allow you to, instead of filling out this tab, to submit a CSV file. Maybe your system can output a file for you and you don't have to do all the data entry. So we do allow that as an opportunity. And then, but when you are filling out the table, as most of you probably would, we don't have hundreds of districts. We pre-populate that table with as much data as possible. There's 2 optional columns in the middle, and that are for your name. We pre-populate the authority's name and our name, but if you want to see your names on there, you can provide, and your codes on there, you can provide that. And if you provide it, we will pre-populate that again the following year, but you don't have to use those columns. And then there's columns to report the DOR codes that we talked about earlier. And then you're just entering the amount of distributions for that year to each district. And those automatically get totaled on line 3. If you do submit the CSV file instead of filling out the table on line 4, then you'd have to type in the totals on line 3, because those wouldn't be able to be automatically calculated. So yeah, just learning what you're distributing to each district. And then on the TIF enforcement deduction tab, we carry over information from the prior tab to basically identify what we think you should be sending us as far as enforcement deduction amounts. And then on line 2, you just enter the amounts that you're submitting to MMB and the date that you sent it. And if that total for that line should approximately equal within some minor rounding difference, what was kind of expected up above. If there is a bigger difference than just minor rounding, then we appreciate a comment to explain what the difference might be. And we always appreciate comments if there's a reason to comment about something that's going on. So, all right, there are a couple of notes just to emphasize to help avoid problems. Most importantly, do not cut and paste data into this form because it breaks the form and then we can't import it and then we need to get it resubmitted. So I know you'd love to cut and paste data to avoid typing, but it just breaks the form. But also check instructions when a district is not listed in a dropdown. We cover how to handle that in the instructions. Make sure to send it as an Excel file, not as the PDF. We can't import it unless it's an Excel file. Please don't reformat or skip lines or insert notations because that'll break the form as well. And then do not report redistributed increments as distributions because, like I said earlier, once you're redistributing returned increment, it's not increment anymore. And comments are always very helpful. And again, this is information that we actually use a lot, and it's very valuable for us. So please understand that this isn't just government bureaucratic reporting. It's actually very useful. It can be the first time we learn about new districts or decertifications. We can learn about first receipts of increments that help determine the duration limits. We use it to verify their reporting of how much increment they say they're getting, and we use it to verify returns of increment, and we use it to track down those enforcement deduction payments. So this is a very valuable reporting to our office. All right, are there any questions about TIF reporting?
I haven't seen any.
Okay, well, we're basically done here. Just the last little couple slides are to point out some resources that are available on our website. So the TIF County Guide is the most important one. It's a guide where we basically found all the references to county responsibilities in the TIF Act, and we put them all together in a county TIF guide. So you can find it on our website under the training and guidance area. That's a very valuable resource. And then if you're not signed up for our weekly updates, every Friday we send out an email with a weekly update, and we also post it on our website. And we have lots of reminders in there about don't forget to do this, this deadline's coming up. So if you're not signed up for the OSA's weekly updates, I recommend you do that. Otherwise, you can find statements of positions and training videos on a number of topics on our website. Whenever you're trying to troubleshoot something, there's good information out there. And included in the county TIF guide, I wanted to point out, we do have a thorough checklist for county officials. Or again, we tried to identify every responsibility. We kind of organized them into groups. And so this would be, we think, a good annual reference to go through this checklist to make sure you're not missing any responsibilities. And we've got sections for everything we've kind of already talked about in there. And then lastly, one new thing is we have some new dashboards that are coming to our website. 2 of them are for identifying reporting compliance, and one of those is for the county TIF information form. So if you're failing to send in that form, it'll be kind of highlighted on our website in a dashboard now. These dashboards were funded by the legislature so there can be better access and transparency to reports and data. And we anticipate people will be able to download those reports and data in the near future by using these dashboards. And we also have a dashboard that has, so yeah, this is what the compliance reporting dashboard looks like. It just says when your reports were received. And we do have another kind of database dashboard out there where people can look up some limited information about each TIF district using a dashboard. So just know that that's a resource that's out there. And with that, we conclude our training. We can stay on here if people have any last questions that they want to offer. Otherwise, please complete the evaluation for the training after Haley sends it out. And we really appreciate you joining us and hope you have a good rest of the day.